Hello everyone. So now from this lecture we are going to start with the long questions. Okay? Those questions which are going to be asked for 15 marks, 15 marks in your exams. Understand them carefully, and before you start with this lecture advisably revise alteration of share capital, capital reduction, all the three types thoroughly well before you take up with this lecture. All those notes and entries are going to help you. Let's take up with question number 14 now. Be attentive. The following is the balance sheet of ABC Limited as at 31/3/2019. Equity and liabilities, shareholders funds, share capital, 40,000 equity shares of 10 each. All of you make it 4 lakhs. Okay, add one more zero, 4 lakhs. And 5,006% preference shares of 100 each, 5 lakhs. 4 lakhs plus 5 lakhs, 9 lakhs. In reserves and surplus, capital reserve 25,000, and profit and loss account negative balance means it's a loss. Okay, this is the accumulated loss. This is the accumulated loss. 4,80,000. 4,80,000 minus 25,000, 4,55,000. Long-term borrowings in that 5% debentures of 100 each, 2 lakhs. So the number of debentures would be 2 lakhs divided by 100, that is 2,000. Okay, the number of debentures would be 2,000 debentures. Outstanding interest on debentures 30,000. So long-term borrowings 2,30,000. Current liabilities, creditors 1,55,000. In non-current assets, fixed assets, tangible assets, building, plant and machinery, furniture. Intangible assets include goodwill and patents and trademarks. Current assets include inventories, stock in trade, trade receivables, debtors, cash and cash equivalents, cash at bank and cash in hand. Other current assets, discount on issue of debentures. This is a fictitious asset. Okay, this is a fictitious asset. Now, note preference dividend is in arrears for past 3 years. This is contingent liability. Okay, footnote below the balance sheet is always a contingent liability. Now, it was decided to reconstruct the company. So, how will you identify in your exams that the question is on reconstruction, internal reconstruction? Reconstruction word will be given. Now, how will you differentiate in exam that the reconstruction does not indicate external reconstruction but internal reconstruction? In external reconstruction, new company's name will always be given to you. I repeat, in external reconstruction, new company's name will always be given to you. Like this was the question of external reconstruction, and here you all can see a new company S Limited was to be formed. So once again I repeat, external and internal reconstruction, both the types of questions, reconstruction word will be given in the question. But how will you differentiate between external and internal reconstruction? In external reconstruction, the new company's name will be given because old company goes into liquidation and a new company is formed. In internal reconstruction, only reconstruction word will be given. New company's name will not be given. The following scheme was prepared and duly approved. First, let's discuss all the adjustments, then we'll discuss what is to be done. The preference shares shall be converted into 7% preference shares of rupees 50 each. So you can say here in preference shares this 100 is the old face value and they are converted into 50 each, means this 50 each is the new face value. So first situation of capital reduction where the shareholders sacrifice by changing the face value is to be passed over here. Okay, 50 rupees what they sacrifice, from 100 they are reduced to 50. That 50 rupees what they sacrifice will be transferred to capital reduction. The equity shares will be reduced to rupees 3 each. So again this 3 is the new face value, and in balance sheet 10 is the old face value. Again from 10 they are reduced to 3 rupees. So 7 rupees what they sacrifice will be transferred to capital reduction. Here 50 is what they sacrifice, that will be transferred to capital reduction. Here 7 rupees is what they sacrifice, will be transferred to capital reduction. The 5% debentures shall be converted into 6% debentures. Rate of interest we are increasing, but of 75 each. Again there is a new face value. Old face value is 100. So from 100 they are reduced to 75, means they sacrifice rupees 25, that will be transferred to capital reduction. Okay, they sacrifice rupees 25, that will be transferred to capital reduction. The debenture holders also agree to waive. Waive means sacrifice. I repeat, in your pamphlets all of you write down above waive, sacrifice. The sacrifice interest means entire interest will be transferred to capital reduction. Which interest? This outstanding interest on debentures 30,000 in the balance sheet, entirely it will be transferred to capital reduction. I repeat, waive means sacrifice. Debenture holders agreed to sacrifice interest, so entire outstanding interest of 30,000 will be transferred to capital reduction. Arrears of preference dividend to be cancelled will have no entry. As we discussed, that entry will be passed if the preference dividend is paid. It is cancelled, so the contingent liability, if it is cancelled, the only thing is it will not appear in the new balance sheet as a contingent liability. That's it. But journal entry is not to be passed. Journal entry is to be passed only when the contingent liability is paid. You all can see in the summary we had written that in case of preference dividend, if it is sacrificed by the preference shareholders, then there is no entry. And remove it from the footnote means in the new balance sheet also it will not come as a footnote. These entries are to be passed only if the preference dividend is paid. Here the preference dividend is cancelled, therefore no entry. The sundry creditors agreed to waive. So now all of you, what do you mean by the word waive? Sacrifice. Write down about that, sacrifice. 30% of their claims. 30% of their claims means creditors are 1,55,000. So 30% of that they sacrifice. So 1,55,000's 30% must be 46,500. That will be transferred to capital reduction. And equity of rupees, and to accept equity of rupees 30,000 of their renewed claim in part settlement. Keep it in mind, they are not fully settled. Out of 1,55,000, 30% only they sacrifice. That is 46,500, which we transfer to capital reduction. And 30,000 of equity shares we will be issuing to them. So 46,500 plus 30,000, 76,500 is only settled in part right now. Remaining amount will continue to appear in the balance sheet. I repeat it, if any confusion, pause, rewind this portion and listen to that again. The sundry creditors agreed to waive, that is sacrifice, 30% of their claims. So 1,50,000's 30%, 46,500 they will sacrifice, that will be transferred to capital reduction. And to accept equity of rupees 30,000 means 46,500 plus 30,000. Right now the settlement is done of only 76,500 as it is given of their renewed claim in part settlement. So from 1,55,000 only 76,500 is settled, and remaining amount 1,55,000 minus 76,500, that is 78,500, will continue to appear in the balance sheet in liabilities. Part settlement is only done. How much of part settlement is done? 46,500 plus 30,000, 76,500 of part settlement is done. Remaining still is a liability and will continue to appear in balance sheet. The assets are to be revalued as follows. Now whenever assets are revalued, bifurcate them into two categories. Which assets value is going up and which assets value is going down. Because if any assets value is going up, it will be transferred to capital reduction. If it is going down, it will be utilized to write off from using capital reduction. I repeat, if any assets value is going up, it will be transferred to capital reduction, that's a profit. If any assets value is going down, then capital reduction will be utilized in writing off those assets. So building was in balance sheet 2,15,000 and now 250, this is going up. So this will be transferred to capital reduction. Profit of 2,15,000 and 250 means 35,000. 35,000 will be transferred to capital reduction. Whereas stock in trade 80,000 from 90,000, so this is to be written off 10,000. Furniture and fixtures 55,000 from 60,000, so this is to be written off 5,000. Plant and machinery 2,25,000 from 2,55,000, so this is to be written off 30,000. And sundry debtors 70,000 from 75,000, so this is to be written off 5,000 again. All the written off will pass a separate entry. We can combine entry for stock, furniture, plant and sundry debtors for writing off, and for building separate entry will be passed because there we have to transfer 35,000 to capital reduction as its value is going up. Patents, trademarks and other fictitious assets including goodwill is to be written off as far as possible. Now for this purpose, as far as possible means we will have to make capital reductions ledger account. I repeat, as such in all the questions, keep it in mind, you all have to compulsorily make capital reductions ledger account, compulsory. And then we will see how much amount is transferred to capital reduction and how much balancing figure is remaining. If balancing figure is sufficient, then patents, which is 45,000, patents and trademarks 45,000, other fictitious assets including goodwill. So other fictitious assets means this, we discussed discount on issue of debenture is a fictitious asset 20,000, including goodwill 55,000. So we will see 55 plus 45, 1,20,000. 1,20,000 or more amount remains in capital reduction, we will write it off completely. If less amount remains, then as far as possible, suppose 1 lakh is only there, then we have to write off only 1 lakh against 120. And fictitious assets will also include this accumulated loss. Okay, this accumulated loss is also a fictitious asset to be written off. I hope all of you have also done these markings in the balance sheet in the questions. So this 4,80,000 is also to be written off, plus this 1,20,000. So 6 lakhs is to be written off. If we have more than 6 lakhs, we'll write off entire 6 lakhs. If we have less than 6 lakhs, then this as far as possible. So this loss etc. will write off how much balance remains depending on capital reductions ledger account. Draft the journal entries to give necessary effects to the aforesaid scheme and also prepare the balance sheet after the reconstitution of the company. All of you pause the video and make the format of journal entries and capital reduction ledger account. Journal entries you all can make a format of approximately 2 pages and capital reduction account half page. I repeat, journal entries 2 pages, capital reduction half page. Pause the video and make the format. Yes, I hope everyone is done with the format. So we start with the entries now. Be attentive. First entry, adjustments wise we have to go. So whatever is the first adjustment, first entry will be passed for the same only. So first entry all of you write down as the first adjustment is the preference shares shall be converted into 7% preference shares of rupees 50 each. So as we discussed, this 50 is the new face value, 100 is the old face value, 5,000 preference shares are there, 6%. Okay, and 6% is also converted into 7%, and 50 rupees what they sacrifice will be transferred to capital reduction. So 6% preference share capital, all of you must be writing it, 6% preference share capital with old face value, that is rupees 100 account debit, and amount will be, as you all can see, 5,000 preference shares are there, so 5,000 into 100, old face value 5 lakhs. Okay, 5,000 into 100, that is 5 lakhs. Old face value we have to debit. Now new face value, first of all 7% is the new dividend rate, and new face value is rupees 50 what we have to credit. So to 7%, from 6% they are converted to 7%. To 7% preference share capital with new face value rupees 50 account. An amount now, 5,000 shares remain same, but from 100 they are reduced to 50. So amount will become 5,000 into 50, that is 2,50,000. And remaining 50 rupees what they sacrifice will be transferred to capital reduction account. So to capital reduction account, $5,000 preference shares into 50 rupees is what they sacrifice, which is transferred to capital reduction, 2,50,000. Okay, old face value 100 account debit, new face value 50 account credit, and remaining 50 what they sacrifice is transferred to capital reduction, being 5,000 preference shares of rupees 100 each reduced to rupees 50 each. Okay, being 5,000 preference shares of rupees 100 each reduced to rupees 50 each. Now second entry will be passed from second adjustment. So adjustment wise itself we have to go here. It's not like amalgamation chapter where we have to remember the order of entries. Here just read the adjustments, apply your logic, common sense, and pass the entry. The equity shares shall be reduced to rupees 3 each. So as we discussed, old face value rupees 10 we will debit 40,000 into 10, 4 lakhs. New face value 3 rupees we will credit 40,000 into 3, 1,20,000. And 7 rupees what they sacrifice 40,000 into 7, 2,80,000 will be transferred to capital reduction. So all of you write down equity share capital with old face value, that is rupees 10 account debit, with 40,000 into 10, 4 lakhs. Now they are reduced to rupees 3. So to equity share capital with new face value rupees 3 account credit, and amount will also be 40,000 into 3, 1,20,000. And to capital reduction account, what they sacrifice will be transferred to capital reduction. 7 rupees is what they sacrifice. From 10 rupees they are reduced to 3. So 40,000 into 7, 2,80,000 being 40,000 equity shares of rupees 10 each reduced to rupees 3 each. Now third note, third adjustment, third entry. 5% debentures shall be converted into 6%. So old are 5% which we will reverse and debit. New are 6% which we will credit and create and bring it in the books of accounts. Further debentures of rupees 75, that is the new face value. So old face value 100 rupees we will debit and new face value 75 we will credit. Amount as we calculated 2000 debentures are there, 2 lakhs divided by 100. So 2000 into 100, 2 lakhs we will debit. 2000 into 75, 1,50,000 we will credit. And remaining 25 rupees, 2000 into 25, 50,000 will be transferred to capital reduction. For interest, pass the separate entry. So first you write down this entry. Okay, one more thing, first two entries are done. So simultaneously let us do the posting in capital reductions ledger account also. From the first entry to capital reduction means in capital reduction opposite side by 6% preference share capital account. What they sacrifice is 2,50,000. Okay, to capital reduction means in capital reduction credit side 2,50,000. Opposite account by 6% preference share capital account 2,50,000. Okay, so capital reductions ledger account is compulsory in every question. With every entry you must do the posting. Second entry to capital reduction is 2,80,000. So capital reduction account credit side 2,80,000. Name of opposite account by equity share capital account. So second entry by equity share capital account amount 2,80,000. Okay, now from the third adjustment we pass the entry of debentures. So first old debentures we have to debit there, they are 5% and face value is 100, old face value. So if you write down 5% debentures in bracket old face value rupees 100 account debit, and as we discussed in the balance sheet 2000 debentures are there, so 2000 into 100, 2 lakhs. Now new face value 75 rupees we will credit, so 25% debentures with new face value rupees 75 account amount 2000 into 75, 1,50,000, and 25 rupees what they sacrifice will be transferred to capital reduction. So to capital reduction account (2,000 into 25), 50,000 being 2,000 debentures of rupees 100 each reduced to rupees 75. Now to capital reduction means again in capital reduction account we will write on credit side. Okay, to capital reduction, so In the capital reduction account, we'll write on credit side 50,000. Opposite account by 5% debentures account. So capital reduction will be write on credit side by 5% debentures account, and amount 50,000. So third entry is also done. Now fourth adjustment, fourth entry. Okay, fourth adjustment has no journal entry because areas of preference dividend are to be cancelled, that will have no entry. Okay, areas of preference dividend are to be cancelled, will have no entry. Now fifth adjustment. Okay, one more minute. In the third adjustment, outstanding interests entry is remaining. The debenture holders also agreed to waive or sacrifice interest. So entire interest of 30,000 will be transferred to capital reduction. For that also journal entry will come. Read on the fourth entry. Outstanding interest on debentures account debit 30,000. Outstanding interest on debentures account debit 30,000 to capital reduction account 30,000. Okay, outstanding interest on debentures account debit 30,000 to capital reduction account 30,000, being interest waived or sacrificed, anything can be written, by debenture holders. Okay, being interest waived or sacrificed by debenture holders. Now again, to capital reduction account 30,000. So capital reduction credit side 30,000, opposite account by outstanding interest on debentures account. So capital reduction credit side by outstanding interest on debentures account 30,000. Now fourth adjustment, areas of preference dividend is cancelled, will have no entry. We have to pass the entry if they are paid. Now fifth, the sundry creditors agreed to waive. Waive means sacrifice 30% of their claims. 1,55,000 are sundry creditors. 30% 46,500 they sacrifice, which will be transferred to capital reduction. And to accept equity of rupees 30,000 in renewed of the renewed claim in part settlement. Part settlement means right now 46,500 plus 30,000, only 76,500 is settled. So fifth entry would be sundry creditors account debit. Okay, sundry creditors account debit to, now what they sacrifice will be transferred to capital reduction account. So to capital reduction account 1,55,000 into 30%, that is 46,500, and to equity share capital account, 30,000 of equity shares are given to them. So to equity share capital account 30,000. Now how many equity shares would have been given to them? All of you be careful. The face value of equity shares has been reduced to rupees 3 as per second adjustment. I repeat, as per the second adjustment, the face value of equity shares has been reduced to rupees 3. So for 30,000, 30,000 divided by 3, 10,000 equity shares would have been issued. Okay, keep this in mind. This will help us in making the balance sheet. 30,000 is given in the form of equity shares, but how many equity shares would be issued for that? After the sacrifice, now the new face value of equity share is 3 rupees. So 30,000 divided by 3, 10,000 equity shares would be issued for the same. Now 46,500 plus 30,000. Right now sundry creditors are closed and debited with 76,500. Remaining will continue to appear in the balance sheet. Being creditors partly settled. Wherever there is any confusion, pause the video and rewind and listen to that again. Explanation is already given very slowly and steadily. So if you rewind and listen again, you'll be able to follow that. Being creditors partly settled. Now to capital deduction. So capital deduction credit side 46,500, opposite account by sundry creditors account. Okay, capital deduction credit side by sundry creditors account amount would be 46,500. Now after this sixth adjustment, the assets are to be revalued as follows. Now as I discussed with you, if any assets value is increasing like building, separate entry will be passed, and all other assets which are to be written off, separate entry will be passed. So first we pass the entry for building. Here from 2,15,000 it is increasing to 2,50,000. So profit of 35,000 will be transferred to capital reduction. So building account debit to capital reduction account 35,000. Okay, building account debit to capital reduction account 35,000. Being increase in the value of building. Being increase in the value of building. Now to capital reduction account 35,000. So capital reduction credit side 35,000. Opposite account by building account 35,000. Now all other assets are to be written off. So for writing off the assets, the entry is capital reduction account debit to all the assets which are written off. So what we will do is stock, furniture, plant and machinery, debtors, patents, trademarks, other fictitious assets means that discount on debentures and P&L account, these both are other fictitious assets, and goodwill. As far as possible, all of them writing off will pass one entry only. So first you write down the journal entry for that. For writing off the assets, as we discussed in the past lectures, the entry is supposed to be capital reduction account debit to all the assets which are written off. All of you can see this entry over here. Okay, same way here we'll pass the entry capital reduction account debit. Now we are utilizing the capital reduction account to writing off the value of various assets. So capital reduction account debit. Now we keep writing off them one by one. So to stock in trade, as we discussed, we have to write off 10,000 because here the value of stock in trade is 90,000 and now it is valued at 80,000. So to stock in trade 10,000, you can simply write to stock account 10,000. Simultaneously all of you can keep doing the posting also capital reduction account debit. So capital reduction account debit side to stock account, opposite account to stock account 10,000. Then further if you see that adjustment, furniture and fixtures 55,000 means we have to write off 5,000. In balance sheet it is 60,000. Now its value is 55,000, so we have to write off 5,000. To furniture account 5,000. So in capital reduction account also debit side to furniture account 5,000. Then after furniture we have plant and machinery 2,25,000 in balance sheet it is 255, so we have to write off 30,000. So further we will write to plant and machinery 30,000. Also again capital reduction account debit, so in capital reduction account debit side to plant and machinery 30,000. Then after plant and machinery 30,000, all of you can see the next is what? Sundry debtors 70,000 from 75,000, so here also we have to write off 5,000. So to debtors account 5,000, to sundry debtors account 5,000, and capital reduction account also debit side to sundry debtors account 5,000. So up till this sundry debtors we have written off. Now patents, trademarks and other fictitious assets. What will this other fictitious assets include? As I said, two things: discount on issue of debentures and profit and loss accounts accumulated loss. Including goodwill is to be written off now as far as possible. So what we shall do is we'll do the total of capital reduction account, and after writing off every item we will see how much balance is remaining, so that as far as possible condition is fulfilled. First all of you do the total of credit side of capital reduction account: 2 lakhs, 4 lakhs, 5, 580, 610, 650, 680, 6 lakh 91,500. Okay, 6 lakh 91,500. This is a procedure to be adopted whenever they say as far as possible. So 6 lakh 91,500. Now you already obtained this. You all must be having calculator, so directly in calculator do 691,500 minus 10,000 minus 5,000 minus 30,000 minus 5,000. So 50,000, if you subtract 641,500 must be remaining. I repeat, 641,500 is remaining in capital reduction. Now we write off one by one as far as possible. I repeat it. First do capital reduction account credit side total 691,500 minus 10,000, 5,000, 30,000, 5,000, 641,500 is remaining. Now we write off as per the last adjustment as far as possible. So first patents and trademarks. We have 6,41,500 and patents and trademarks are only 45,000. So can we write it off completely or not? Yes. So to patents and trademarks 45,000. All of you write down two patents and trademarks 45,000. That we can write off entirely because 6,41,500 is still there. Even in journal entry, two patents and trademarks 45,000. So ledger account and journal entry is to be done simultaneously at the same point of time. Okay, then only this entry you'll be able to pass. Now all of you doing calculator 641,500 must already be there on your screen minus 45,000. All of you must be able to do it. So still there is a balance of 5,96,500. Now let's see after patents and trademarks what next is to be written off. Patents and trademarks, other fictitious assets. As I said, other fictitious assets include discount and P&L. How much is discount? Only 20,000. We are still left out with 596,500. So can we write off discount of 20,000 or not? Yes. So to discount on issue of debentures account 20,000. To discount on issue of debentures account 20,000. Even in capital reduction debit side, two discount on issue of debentures account 20,000. So if you further subtract this 20,000, then you'll find still in calculator directly do minus 20. So you'll find 5,76,500 is still remaining. Now we have which other fictitious asset? P&L account. How much is P&L account? Loss of 4,80,000. Okay, loss of 4,80,000. But still we have balance of 5,76,500. So 4,80,000 of loss can also be entirely written off. Written to profit and loss account 4,80,000. Okay, to profit and loss account 4,80,000. Now after profit and loss account, here also write down the entry to profit and loss account 4,80,000. Now still what balance is left out? If you subtract 4,80,000, still 96,500 is left out. Okay, still in calculator if you do minus 4,80,000, 96,500 is left out. Now after P&L account including goodwill. So how much is goodwill? Goodwill is 55,000. So goodwill also 55,000 can be completely written off because 96,500 is still left out. So to goodwill 55,000. Okay, to goodwill account 55,000. This will also be entirely written off. In ledger account also debit side to goodwill 55,000. So as far as possible in this question carried no relevance because as far as possible lot of money is available and all assets could be easily written off. So further if we write off 55,000, still you'll be left out with 41,500. Okay, still you will be left out with 41,500. Now what will you do with this left out amount of 41,500? We studied that after writing off all assets, by chance if any surplus amount is left out, then that must be transferred to capital reserve. You can see here in this explanation done earlier, if any balancing surplus is there, then we have to transfer to capital reserve. In this question, this surplus amount left out, still 41,500, will be transferred to capital reserve account. Okay, so debit side you all will write to capital reserve account in bracket balancing figure. So after writing of all the assets, if still the balancing figure remains, it must be transferred to capital reserve. Here also we'll write to capital reserve 41,500. So this procedure must be done in calculator. All of you do the credit side total of capital reduction account minus debit side total, and then keep on finding the balance account after writing off every amount so that you come to know how much balance is still remaining. Okay, finally any surplus left out must be transferred to capital reserve. Now what is the total amount we have to debit for capital reduction account here? 10, 15, 45, 50, 95, 115, 595, 595, 650, 691, 500. Okay, as we already know, the total of credit side of capital reduction was also 691, 500. So that balancing figure 41,500 is transferred to capital reserve. Now total of journal will be done by every one of you. 5 lakhs plus 4 lakhs 9 lakhs plus 2 lakhs 11 lakhs 11 30 12 lakh 6,500 12 lakh 41,500. So 19 lakh 33,000 must be the total of balance sheet. Okay, sorry, not balance sheet, journal entry. 19 lakh 30,000 must be the total of journal entry. So any confusion, all of you can pause the video and rewind it to understand it again. Now again we have to make balance sheet as it is asked in the question that after passing the journal entries, prepare balance sheet after the reconstitution of the company. So all of you give the heading in your notebooks, balance sheet of ABC Limited. This part is very important, and reduced. Okay, if you all remember, we have done this in the notes also earlier, that the words and reduced should be written after the name of the company in the heading of the balance sheet. So here we will be writing the word balance sheet of ABC Limited and reduced as on 31/3/19. Make a blank format of balance sheet because first we'll make the notes, and after making the notes we will do fill in the blanks. So equity and liabilities, shareholders funds, share capital, reserves and surplus, non-current liability. All of you pause the video and make this blank format fast. Okay, you all can take a screenshot and then make this blank format fast. So I give you time, pause the video, take this screenshot and make a blank format as fast as possible. Then we make the notes. Okay, take the screenshot, enlarge it, zoom it, and then make this blank format as early as possible. Okay, I hope everyone would have done it by now. So first we'll make the notes. Now first note, all of you write down share capital. First note, share capital. In that, authorized capital is not given in the adjustments. Okay, authorized capital, I repeat, is not given in the adjustments. So we'll write question mark as we have been doing earlier also. So all of you write down authorized capital and question mark and double underline as it is not to be included in the total. Then all of you give the heading issued, subscribed and paid up capital. Now how will we find this, understand it? Already in the balance sheet we have 40,000 equity shares, but the only difference, now from 10 rupees they are reduced to 3 rupees. Okay, so same 40,000 shares but the face value is 3. Moreover, to the sundry creditors also we have issued this 10,000 equity shares of 3 rupees 30,000. So 40,000 already there plus 10,000 issued to sundry creditors. Now we will have 50,000 equity shares. Okay, now we will have 50,000 equity shares of rupees 3 each. New face value is 3 rupees. 50,000 equity shares of rupees 3 each, 1,50,000. I repeat, how is it obtained? 40,000 equity shares already there in the old balance sheet, plus sundry creditors are given equity shares of 30,000, or if you can see in the fifth adjustment, sundry creditors are given of 30,000 of equity shares in the fifth adjustment, and as the face value is 3 rupees, we discussed in the fifth entry that 30,000 divided by 3, 10,000 equity shares will be issued for that. So 40,000 existing shares plus 10,000 issued to creditors, total shares issued are 50,000 equity shares of 3 each. Now preference shares, how many are there? Already in the old balance sheet you all can see 5,000 preference shares are there. They will continue to appear in the balance sheet, but instead of 6%, now they have become 7%. And the new face value is how much? All of you can see here the new face value is 50 rupees. So same 5,000 preference shares but 7%. So all of you write down 5,000 7% preference shares. Okay, from 6%, all of you can see in adjustment 1 they are changed to 7%. they are converted to 7% of rupees 50 each. Now the new face value in first adjustment you all can see is 50 each. So 5,000 into 50, 2,50,000. And disclosure will come of above. See that 10,000 equity shares which are issued to sundry creditors are issued for consideration other than cash. We don't get any money against that. So of about 10,000 equity shares are issued to creditors. Okay, 10,000 equity shares are issued to creditors for consideration other than cash. This disclosure will come in bracket. Total amount of share capital 150 plus 250, 4 lakhs. Okay, 1,50,000 plus 2,50,000, 4 lakhs. Next, reserves and surplus. See, we already have in the balance sheet capital reserve of 25,000. You all can see here in the balance sheet we already have capital reserve of 25,000. Profit and loss account gets completely written off, so that will not come. Further, in capital reserve, in addition to 25,000, we have transferred this 41,500 surplus amount in the last entry. So now capital reserve will come what amount? In reserves and surplus, capital reserve 25,000 was already there, plus we have transferred 41,500 in the last entry, balancing figure. So now it will be 66,500 reserves and surplus. Total also 66,500. Next, after reserves and surplus, third note, what do we have as per the balance sheet? Long-term debts or long-term borrowings. Now long-term borrowings, we already had 2,005% debentures of 100 each, but now as per adjustment 3 they are of 75 each. So 2,000, and also rate of interest is changed to 6%. Okay, rate of interest is also changed to 6%. In third entry all of you must write 6% instead of 5%. So 2,000 6% debentures, 2,000 6% debentures, and new face value is rupees 75. 2,000 6% debentures of rupees 75 each. So 1,50,000. Total also 1,50,000 because 30,000 of interest gets cancelled. Okay, that interest 30,000 which was there in the liability, that is entirely sacrificed and closed and debited in the journal entry. So that will not now come in the new balance sheet. It is entirely sacrificed by the debenture holders. Then after that we will have the next note as trade payables, creditors. Now as we discussed, creditors are also not settled completely. From 1,55,000 in part settlement, we have closed with only 76,500. So remaining amount of creditors will still appear in the balance sheet. All of you write down creditors or sundry creditors from 1,55,000. As per the journal entry, we have closed and debited only 76,500. So remaining 78,500 will continue to appear in the balance sheet. Total also 78,500. So asset side all are done. Now tangible fixed assets. Okay. Now in tangible fixed assets, all of you have to remember one thing, that whatever amount is written off, particularly for fixed assets, that okay, the amount, second note all of you have seen here, we have done it in the previous lecture. The amount written off for various fixed assets are to be shown in the balance sheet for 5 years. So directly we cannot write the final value. Okay, directly we cannot write the final value. We have to show the amount written off. Let us do it one by one. In the previous balance sheet, in tangible fixed assets, we had building. That building of 215 has now become 250, that we can write directly. Only written off is to be shown separately. So building you all can write in the notes 2,50,000 directly. Building is 2,50,000. Outer column. Then after building, which other asset was there in the previous balance sheet in fixed assets? Plant and machinery. Now here we will show 255 of plant and machinery was there. 255 of plant and machinery was there. And we have written off from 2,55,000. From 2,55,000 we have written off 30,000. So that we have to show in the notes. Plant and machinery 2,55,000 in the inner column. Minus written off 30,000. So outer column 2,25,000. Now if you see in the previous balance sheet, after plant and machinery we have furniture of 60,000, and in furniture how much we have written off? If you see the last journal entry, 5,000. So that again we have to show furniture 60,000 minus written off. Okay, here you have to mention written off under the scheme of reconstruction. Written off under the scheme of reconstruction. This is the company's law. So you have to write that only. Here also minus written off under the scheme of reconstruction 5,000. So outer column 55,000. After furniture, do we have any other fixed asset? No. Only three fixed assets are there: building, plant and machinery, and furniture, tangible fixed assets. So tangible fixed assets note is done. What is the total of tangible fixed assets note? 2 lakh, 4 lakh, 450, 5 lakh, 5 lakh 30,000. Okay, tangible fixed assets are 5 lakh 30,000. Then intangible fixed assets will not come in the balance sheet because goodwill was there. Okay, goodwill was there 55,000, but that is entirely written off. Entire goodwill is written off. However, if you want, you can show it in the notes. Okay, after tangible fixed assets, you can show it in the notes. Intangible fixed assets, goodwill 30,000 minus written off 30,000, so it will become nil. Now trade receivables. Trade receivables will include debtors. Now only in fixed assets we have to show written off compulsory. So debtors, we can directly write this value of 70,000 which is given in adjustment number 6. Now debtors are worth rupees 70,000. In other items of balance sheet we don't have to show the written off amount. So debtors you can directly write 70,000 and total also 70,000. As per the company law, only in fixed assets we have to show the written off compulsorily. Then in the previous balance sheet you all can see, after trade receivables what do we have? Okay, stock was also there, inventories was also there. So this stock will come, or inventories will come before the trade receivables. Ideally inventories must come before the trade receivables. Okay, so first all of you write down the inventories, and numbering will also be different. Inventories would be 6, trade receivables would be 7, and cash equivalents would be note number 8. So first in inventories we will write stock. How much is the stock? Directly we can write the final value. Here we don't have to show written off. So directly from this adjustment 6 you can take stock of 80,000. Okay, directly from adjustment 6 you can take stock of 80,000. Total also 80,000. Then trade receivables, debtors as we discussed 70,000. So directly we can write that. Debtors, trade receivables 70,000. Total also 70,000. And cash equivalents has cash at bank and cash in hand. No changes are there in that. Okay, in the adjustments. So from the previous balance sheet we will take them as it is. Cash at bank is how much in the previous balance sheet? 12,500, and cash in hand is how much? 2,500. Or if you can see this, so 12,500 and 2,500, 15,000 remains as it is. Okay, 12,500 and 2,500, total 15,000 remains as it is, and total also 15,000. So all the notes are done. Other than that, discount on debentures is completely written off in the balance sheet. No other assets remain. And from the liability side also P&L account is completely written off. All other things are accounted in the balance sheet. Now that blank format what you had made, will finish it. So share capital from note 1 we get what amount? 4 lakhs. Okay. Reserves and surplus from note 1 we get what amount? Note 2, 66,500. So 4,66,500 is shareholders funds. Then long term debt from note 3 what amount do we get? 1,50,000. No other non current liabilities and long term payables, so outer column 1,50,000. Trade payables from note 4 what amount do we get? 78,500. No short term provisions, borrowings and other current liabilities, so total 78,500. So total of liabilities would be, equity and liabilities would be 4, 5, 560, 610, 680, 6,695, 6,95,000. Now asset side, tangible fixed assets from note 5 we get 5,30,000. Intangible fixed assets nil, all other items nil. So total fixed assets 5,30,000. Now here also inventories must come first in the order, okay, in the balance sheet. As per the balance sheet format, inventories must be the first item. Then you'll have trade receivables, in fact current investments. Then we have trade receivables. Then we have cash and cash equivalents. Then we have short-term loans and advances. And lastly, we have other current assets. So let us put these items in the balance sheet. Now inventories as per note 6, all of you can see is 80,000. So all of it on inventories 80,000. Current investments we don't have. Trade receivables as per note 7 is 70,000. So write down trade receivables 70,000. Cash and cash equivalents as per last note is 15,000. So as per note 8, cash and cash equivalents 15,000. No short term loans and advances and other current assets. So 1,65,000, and then 530 plus 165, 6,95,000. Okay, all of you can see it matches with equity and liabilities, and this is the showering of balance sheet. Okay, all of you can see it clearly that okay, all of you can see it clearly. Okay, ignore this. 2 times by mistake it has been printed. All of you can see it clearly that all the items like losses are not there in the balance sheet. Fixed assets which were overvalued are brought back to the proper values. So now this balance sheet shows true and fair view of state of affairs of the business. That's why it is called internal reconstruction. So all of you practice this question thoroughly well again. Similar question will be taken in the live session also, so that I come to know whether you are clear with the concept or not, and more practice will be done in further lectures. That will be all for this lecture. Bye everyone. Take care. See you in the next lecture.